Happy Monday. It is February 22nd. We're going to get into the charts. This is going to be the members slash people who sent me these ticker symbols. We're going to go over them. They are going to be SPY, QQQ, PLTR, AMC, ACIC, WMT, CTRM, OBSV, MSFT, VALE, and SPPI. We're going to get into all of this coming up. Good afternoon. This is Patrick and you're trading with Prime. The first thing we're going to start with is the broad market. What is going on? What happened today? I don't know if you guys had a chance to see my last video where I kind of laughed a little bit, joked a little bit about the market crashing. I know it feels like that as each day goes on, and I'm not necessarily calling for higher prices, I'm only trading the chart in front of me and so what I see each day. And so trading is very dynamic, and meaning in real time, sometimes you'll see this where in real time it will do things where it makes you have to adjust your positioning, adjust your outlook, and to remain unbiased as much as possible, to have a plan and to trade that plan, because anything can happen. We don't always know what is going to happen. Actually, I take that back. We never know what is going to happen. All we have is probabilities of history to kind of guide us and lead the way, pave the way for what's in front of us. Starting with the broad market SPY. What we're looking at right now is we're looking at closing price was 387.03. That's a pretty big difference from where price was yesterday, meaning Friday. And we did close down here on the 20 period moving average. If I had to take a wild guess and I looked at just this price action, if you're just looking at this one candle by itself, that is not a bullish candle. In fact, that is a bearish candle. What it looks like is price opened up, it ran up to back test Friday's closing print, somewhere around that price area, and then it's sold off since then, resting just on the 20 period moving average. Now, this is the cool thing about trading, is that we don't have to get involved quite yet. In fact, we could let the price just kind of do its thing. And if I was to just look at the chart and kind of like, yeah, we're pretty high up here on the chart, have we had a decent pullback or correction? I'm not sure. One thing that really catches my eye is this uptrend. In fact, let me change the color to a color that you may be able to see a little bit better. The first thing I notice is this uptrend, right? And so the market, in my opinion, is only crashing if we get below that uptrend, right? Because that's the uptrend. We're going to be dip buyers. We want to buy the dip. The question is, at what price, what level is that dip going to show up? Because it really can show up at any level. And that's where we have to use our best judgment in real time to decide, you know what, I'm going to take a position. I'm going to go long here. And so first thing we see is we see a lot of gaps in here. A lot of these gaps can act as support and resistance, but the one I'm going to really focus in on is this one down here. And I'm not saying price is going to go all the way down there. What I'm saying is if price does get down there and it gets down there pretty quick, there are multiple reasons why I think this price area is a good dip buying opportunity. With price action confirming that is support and making a higher high, and then we can go ahead and take another long position with the stop just below that pivot. The thing is we don't know if it's going to make it all the way down there, so we really have to just kind of see what price does as it comes down to that area. It really could stop at any point in between today's close, and this is a pretty wide range. In between today's close, we have some more support down here at 382, 382.50. We have support at 379. We have some more at 376. So there's a lot of different areas of support in here. And if I go to an intraday time frame, and I should have titled this video market rotation. There is a question out there, is this market rotation? We see the IWM and the transports doing well today. XLF, but I'm sorry, I take that back. IWM did not do well today, but XLF did well today, and so did the transports. There is relative strength in the IWM compared to the SPY. Not extreme amount of strength, but it's not is looking bearish as the SPY is. So first thing I'm going to look at is the 1 hour chart. Now you can see this trend line up in here. You can see where price has come back to that trend line, finding support. And so if I narrow down on this last little bit of price action, what we see so far, it's not exactly rejecting from this 394.17 area. Instead, what you see is a little bit of curling, which can develop into something more. And that's the thing, is we could see a lot more momentum to the downside. but that's not exactly the rejection as far as it is highly rejected, kind of like, oh, you can't see it on the screen. Like this area right here, this is a pretty good rejection, right? Where you saw price hit that area and then immediately turn around and in a sharp kind of fashion pull down to the downside. That's the kind of rejection we would be looking for if we're looking for, you know, some sort of market top in here. I don't know if it's a market top. We don't know yet. And so we have to take each day, one day at a time. What I do notice in here is lower highs and lower lows. That is something to be mindful of. And this kind of close today was very bearish. There's no reason why price should be down at the lows of the day. It should have rallied away from this area and stayed away from this area. The fact that it keeps coming down here, it's possible that we see price rally up higher, but just looking at this chart and the daily chart, we can kind of say, you know what, it's a little bit less probable that we rally from here, although there is some chance in there that, you know what, yeah, sure, it could happen. Let's go to the Qs. This is where the culprit it really is with the tech sector. This is looking a lot more bearish. And so because of the Qs chart, do I want to be buyer in the SPY? Not necessarily. I want to see some sort of bottoming pattern in the Qs, and so maybe that support area is going to be around 318. Maybe you'll see the support area around 313, or maybe we'll take it all the way down to 300. We don't really know yet. We want the chart to kind of show us what it's doing. We're on a little bit heavier than normal volume, so that is something to consider. Is there a little bit of participation from institutions? We don't really know yet. Let's take one day at a time. Do I want to be a buyer today or tomorrow? I'm not sure. I want to see a clear and evident reversal candle, and the kind of reversal candle I'm looking for. If you don't get a reversal candle, sometimes it's good. Like right here, you don't really get a reversal candle, but what we do is we see how the chart made a higher high, which was this candle here, and then we let the chart play out, and then it pulled back to this area right here, giving traders an optimal entry to go long. And it's somewhat of a reversal candle, meaning buyers stepped in and pushed the price back up after it fell down. You also see, you know, I know you can kind of see these throughout the chart where you see buyers step in here. That's the kind of candle we're looking for. We're looking for a candle where buyers are stepping in. And right now, this is not evidence of buyers stepping in. This is evidence of selling. So that's also something to watch as far as the Qs goes. Okay, let's get into your guys' charts. Some of these we did take a trade on AMC last week. We are still in this trade, kind of seeing what it does. I don't like how it ran up to $20 and has sold off since then, you know, as part of the meme stocks kind of deal. However, we talked about this in one of the videos. I don't know when it was, last week or, you know. Anyway, there's a basing pattern in here. Now, this basing pattern, we talked about how it could be a bear flag playing out to the downside, but what you see so far is you see a breakout and it's playing to the upside. I had a trader reach out to me and ask me if I'm still in the trade. The answer is yes. I'm looking for higher prices. First, I'm looking for 750. You might have some resistance in here around 683, but I'm looking for 750. And then I'm looking to probably close out around $8.37. I don't know if it'll get up that high. Again, we'll take one day at a time. There's definitely going to be some resistance up here around 870. And then one thing to consider with AMC is that because of the severe downtrend, let me do this. Because of the severe downtrend, you see right in here, you see these lower highs across the chart. You see lower lows across the chart. And that is something to be mindful of. I know we just took out this, you know, we have this higher print right here, taking out these previous highs, but this could still be, let me get a different color in here. This could still be a lower high compared to this one up here, especially if you flip it over to the weekly time frame. Now you can see the blue circles represent lower highs. And that's something to also be mindful of. This could just be another lower high, and we could just turn around from here. Maybe this was just a pump and then we'll sell off tomorrow. It's hard to say. Here's the thing with trading. I'm willing to let this trade play out. I'm willing to bring my stop loss up to break even, and I'm willing to just let this play out. I'm not looking to book profit until I reach my price targets on this kind of a trade. I'm looking for the full potential. And looking at this chart, it looks like we could have, some resistance around 693, 794, and resistance especially up here at 981. I don't know if we'll get anywhere near that, but there's definitely going to be resistance once we get up there. So we'll play it by ear as far as that's concerned. ACIC. I was talking to this chart with a family member over the weekend, and we were talking about what the likelihood was that this would continue higher. So imagine for a minute that this candle was not on the screen. What we talked about this weekend was we talked about how this was, well, for one, you have a reversal candle right here, which is the green one I'm highlighting. And the reason why it's a reversal candle is because you have a lot of rejection in the upper part of the candle. And then Friday's close, which was the end of the week, could have been profit taking, but it could also, because of the type of close where it closed near the lows of Friday and the lows of Thursday. To me, this is more of a bearish signal. Even though we're above all 3 moving averages, it can be bullish on a larger time frame like the weekly chart or a 3-day chart, but it's bullish in terms of just these 2 days. This price action right here to me is more bearish than it is bullish. And so what we're looking at today is we talked about the scenarios. One scenario is it would spike up however much, halfway up or all the way up the Friday's candle, given a good area to go ahead and sell into. And, I reached out to him this morning and we talked about, let's go to the hourly chart. We talked about price levels, right? And so if we're looking at these pivots, what we wanted to do is we wanted to take a look at the pivots. And so you have Fridays, which is around, here's Friday's pivot. We gapped higher in the morning, which was good evidence of it could be maybe it is a bullish day. But this kind of a candle right here is a bearish candle. And then you saw a bear flag pattern. It played out. It gapped higher, so it might have tricked some traders. In fact, it could have fooled me as far as, if we stay above $17, that's the price area, right? Because this is the most recent consolidation. If price can stay above $17, it's most likely headed to 18. Let me clear the screen again. That was your first pivot, was $17. If price got below $17, it's most likely headed to 16. If price gets below $16, it's most likely headed to 15, which is this pivot back here. We follow the pivots, right? If price gets below that last pivot at whatever price this was, which was 1524, if price gets below that area, it's most likely going to want to come down here and fill the gap. And not only that, it's going to want to do it very fast. And so you can see how it happened. It almost drew it down there like a magnet, pulled price down to it. Because a lot of traders see this gap. A lot of traders are eyeing this gap and they're like, you know what, I'm going to put a buy order in just at the top after the gap fill and put a buy order down here at 1438 or maybe at the gap at 1417, and they probably never got in. Now, coming into the end of the day, what we have to ask ourselves is this a bullish candle or is it a bearish candle? I'm leaning more towards this could be a bullish candle, and we do have some areas of support down here. But a lot of times you'll see this kind of a candle, and then the following day you'll see it kind of work its way up, and then it'll slowly drift its way down. So what I would do is I would just say this. I would keep these pivots, keep the pivots on the screen, right? Keep the gap fill on the screen. Maybe you'll have another one down in this area right here. Keep these support pivots on the screen. And so if price crosses through the support area, it's going to go to the next. Well, you don't know it's going to. You try to play accordingly, or you plan accordingly to as far as what's the next area it could get down to. If for any reason we do wake up tomorrow and we have a gap higher in the morning, I would absolutely 100% plan on there being some sort of resistance around here, around $15.96. We could lower that down a little bit. Let's say resistance at 1584 through 1597, and just kind of watch the chart and see what it does in the morning. As far as the bigger picture, sure, maybe this chart, maybe this name will be at $20 or $30 in the next couple weeks. Like, that's too far away for me to try to figure out. But overall bearish pattern on the daily chart, and it looks like it wants to head even lower, maybe 1413. Maybe fill a gap at 1381 in that price area. Overall, I think there should be some support in this area. Plus, you have a moving average come up on the daily chart. So if I haven't been in this trade and I want to enter this trade, it would probably be around $14. By the time price gets down there, the moving average will have time to catch up and act also as support. So keep all of that on the thing. And I hope I wasn't talking too fast for you guys. I have a lot of charts that people sent me, so we'll go through the charts. And if you have any questions, feel free to leave a comment under the video. And by the way, guys, feel free and hit the like button if you gain value out of this video. Hit the subscribe button if you're new. And feel free to join the Discord. The link of the Discord is in the description of the video. Okay, let's get back to the charts. The next one we're going to look at is Walmart. If I can... Okay, Walmart, same kind of thing. You see a nice little run up here starting to curl over a little bit. And the rest of these charts I haven't really looked at. Yeah, the rest of these charts I have not had any time to look at. So you guys are going to run through it with me in real time and kind of look at what I'm looking at. When a daily chart is confusing to me, or it's not as evident or clear, sometimes I like to go to the weekly chart. And the very first thing I see on the weekly chart is I see this bearish consolidation. I see a bearish candle here. I see this bearish consolidation coming from a high of 153. That's the first thing that catches my eye looking at the weekly chart. So to me, it would mean lower prices, which Now, of course, that's, hindsight's 2020. That already played out. Here are the lower prices. Now the question is, on the weekly time frame, is this bullish or bearish? At what price would you be willing to be a buyer stepping into Walmart? And just the very first or second thing that I see, let me do this a little bit different. The second thing I see is, come on, work with me here. This is my price area for Walmart. It doesn't mean that Walmart can't turn around tomorrow and head higher. What it means is, if price got down to that on a weekly time frame, if price got down to that price area of between, let's say, 130 and 132.90, somewhere in that range, in that area, that's where I would want to be a buyer. Now, it is sitting at support right now. So you could say, if it does break support, meaning if it breaks the low of today or the low of this week, maybe it will head through that moving average down into our price zone where we would possibly want to consider buying it. And below that 130 area, you have more support down here around 120. Walmart, great company, long-term, short-term. I think it's a great company. But at what price do I want to step in and buy it? Looking back on the daily chart as I zoom in here, the first thing that catches my eye is this bear flag, this bear consolidation. This could also be institutional buying. Maybe this is a little bit of capitulation on the daily chart. You do, like I was saying before, you do see some support in here. If there was a place as far as close to risk, this would be where it's at. So if you are long, I'm not saying you need to get out of the trade or anything, but what I'm saying is maybe use that low of today as the stop loss, because if it breaks the low of today, there's a higher likelihood that it could come all the way down here between, let's do this. If it breaks low of day today, it could find support down here at 135. Yeah, down here at 135, and then below that is that area we were talking about, the 130 to 132.90, somewhere in there. So let's just keep an eye on that. Now, if I wasn't long and I wasn't entering this trade, I would want to either go long down at that price area, or I would wait for a breakout above today's high, or some sort of price action that was leaning towards the bullish scenario. One or two, both of those options I think would work. So that's Walmart. Let's go over to CTRM. This video just might be a long video. Maybe I should just slow down my speech so you guys can really understand what I'm saying. Okay, sometimes I talk so fast that it's hard to understand. Okay, so what do I see on the daily chart? I like this chart. I like where it's at. I like what it's doing, but I do see the last four or 5 days in here as more bearish than bullish. It is a bullish chart in context of above all the moving averages, but what I see is I see a price that probably got a little bit ahead of itself. It ran all the way up here to 953. It has since then pulled back. What I would want to see if I was a buyer, I want to see this bear flag play out, meaning I want to see price come back closer to $1. And then below $1, you can see the what I have on the screen, 84 cents, $1.06, somewhere in there. And then where are we at as far as today? The other scenario that could play out, there, can you guys see it? What really could play out is something like this. Or the third thing that really catches my eye is this pattern in here can be considered a bull flag. And the reason why I say that is you see this price action, you see this bull flag, price shoots up here. It's now consolidating. Here's your flag, and it's possible that it shoots out. Before I was to go long in something like this, I'd want to see a high above 137. The only thing is you have to be really careful, because above 137, you're going to come immediately into some resistance here and here. And I'll give you the prices. First resistance around 140, second resistance around 155 to 157, somewhere in there. If it can clear 157, I think this could be a long idea. Well, you could, it's kind of trader's choice. I don't personally like to trade this kind of momentum when it's already ran pretty hard, but you could go long above today's high. The problem with that is running into that 140 resistance. You might not get a lot out of it before it started to kind of curl or turn over. But that's the very first thing I see. I see a bear flag here, possibly playing out to our 84 cents. And the other thing I see is a bull flag, possibly playing out to higher prices. Definitely resistance around $2. So I don't know if all the stuff I just said makes any sense, or if it, I'm kind of talking with both sides. And that's kind of the point, is like, let's dissect this thing. Let's look at both sides of this. Now, I do like the hourly chart a little bit better. So if I go to a different time frame, now I can see this price action. It runs up, and now it looks like it's kind of curling. Now it looks like you have a reversal candle in here above 106. So it's this little green candle right here. It would have been nice to have a little bit longer of a wick in there, but it's more of a conceptual. It doesn't have to be perfect. And I do like this price action. So now I could say, you know what, I would be willing to take a trade off of this. And the reason why is because it's consolidating underneath resistance. Now you can see a little bit more clear underneath 140. I know we're down at 123, but closing price 123. But I do like this price action. If it can get above 130, I would probably step in and take that trade, at least for a day trade. I don't know if I would swing it overnight, because you will definitely have resistance at 141, and then some more up here around 155, and then up here at 174, and then up here at 194. Take it one day at a time. It might need a little bit more time of consolidation, burning off some price or time before it can make another run. OBSV, thank you for the charts. I appreciate it, guys. Okay, let's take a look at the daily chart. What do I see? Absolutely bullish as far as this period in here. You see this, you see how price runs up to this area, it finds some resistance, and then you see it break out of this consolidation. Again, it finds some resistance. It's having a really hard time getting above this gap in here. And let's get an actual price on that gap. If I go all the way back here, can you see it on your screen? You can't. Well, let me see here. Okay, so here's a gap in here, right? Daily chart, $5.17. See how price is having a hard time getting through that area? If I do this, draw a little line across the screen, right, just like that, it's having a hard time. So for something like this, I personally like to let price just consolidate, maybe make higher lows, give the moving averages time to catch up, and you can either plan your trade to go long above that gap, or you can plan your trade, you can accumulate the higher lows if you would like. It depends. You know, we have to remember where the price just came from. It came from 250 all the way up to 550. So it could be a little while before it tries to get up higher there. You know, this candle of today's price action, if I just kind of go in on this candle here, this is considered a reversal candle. It's on heavier than normal volume, but it could also just be heavier volume because there's a lot more price action in this name the last couple of days. But this is like I said, a reversal candle. It's one way of looking at it. Another way to look at this is that it's an inside day. I know the wick is way up here, but it is technically an inside day. So as long as price stays between this area, and I'm going to give you a price here in a second, between 422 and 507, as long as price stays in between this area, all the chart is doing is getting ready to make another move to the northern side. With the understanding that if it does break to the southern side, it will probably break pretty hard and fast after a long period of consolidation. So keep your stop losses in place, keep your targets in place, and I would just kind of let that play out if you're already in the trade. Okay, MSFT. We love Microsoft. Where are we at? Let's go to the weekly time frame. Weekly time frame, you can see Microsoft's a beast. It always has been. You see a lot of consolidation in here, and I know this is the weekly time frame, and since then it actually broke out of this consolidation, right? And so what would we be first targeting to be a possible buyer, right? Are we looking for a backtest of that previous consolidation? I can tell you this, it's going to take coronavirus 3.0 or whatever black swan event to get price to just shoot right back through that 213.48 area. It's going to be it'll take a lot of work. A black swan event would have to come out in the next couple days to get price to shoot right through that area. The downside is that's a pretty wide range on a $220 stock, or I'm sorry, a $234 stock. You're looking at a price range between 205 and 226. So what I would say with MSFT is I would look at the Qs and I would say, are the Qs buyable? Right? Is the tech sector buyable? Would I want to get involved in the tech sector right now? Here's another way of drawing it, just like that. Let's do that. Doesn't that look nice? Doesn't that look nice? So I would say this. I would look for these lower prices. I would look for, you've got the chart kind of curling over here. I would look for lower prices. Yes, it is possible for the price to find support in this area. You do have a small little bit of consolidation, and I'll highlight that. There is a little bit of consolidation in here. And there's also a gap right underneath price. But if it does take out that area, it's highly probable that it'll head much lower, probably in this range of 223, 227. And by the way, this is not financial advice. I'm just hypothetically, if price falls to that area, I would give it higher odds that it would want to go down and back test the bottom or the top of that bull flagish pattern. So keep that on there. Let's look at two more charts here. VALE. And by the way, if you're in Microsoft, before I go past that, let's double back here. Let's double dip. I'm not saying that you necessarily have to sell it, especially if it's a long-term portfolio. I'm not saying that. I'm just saying be mindful of where price is on the chart and what it looks like it is. Where is it headed? Where does it look like it's headed? There are places that it might want to start targeting here. If I'm not in the trade, right? If I want to be a buyer in this market, what kind of correction am I looking for? Am I looking for it's only down 4.5%. Am I looking for a 10% correction? This pulling back all the way to this trend that I just drew would be an 8.4%. It still wouldn't be in correction territory. And then again, go look at the broad market and let's look at what the broad market is doing. I think there's plenty of time to get involved in these charts. I also wouldn't short Microsoft. If you're looking for a short trade, I would not short Microsoft. I would just let it kind of play out, and you're more likely to make money to the upside in a bull market. VALE, is that what we're on? That's what we're on. I like this chart. This is a pretty massive run up. I don't know anything about this company. Again, it's not as clear to me on the daily chart. So what I'm going to do is I'm going to go to the weekly time frame, and what do I see? I see huge amount of upside potential. What is this company do? Material, huh? Iron ores. Okay. I don't know anything about this company. But just looking at the chart, what does it look like it is going on here? This is a weekly time frame, so it could be looked at as like, maybe it's a little bit slower of a mover on especially on a larger time frame. You think it could really get going here. But something that first catches my eye on the weekly time frame, this is really something to note here, is you see this area I just put across here. Price it ran into that area, it had some resistance, and since then it has pulled back. It got ready to go here. It broke out, and guess what it did? I say guess what it did as if you can't see the chart. Guess what it did, guys. So we saw on a weekly time frame, it came back and back tested that area, and since then has been rejected off the back test, which is good news for the bulls. Does that mean this is a higher low? I'm not sure if it's a higher low just yet. What I don't like, though, on this chart, just looking at this, is I don't like this price action where the price did go all the way up here and then it's pulled back and closed down here around 1750. Let's do this. Let's go back to the daily. So that's around 1750. Back test around 1627. Let's go to the daily chart and see what I can see on this. So now you can see what's kind of going on now. Here's that price area where it came back on the weekly time frame. It broke out, ran up to $19. It came back into back test. Now we're looking for a higher low. We're scouting the higher low. Well done, whoever sent me this chart, because what I see could be potential support is this area right here. You have this breakout area. Let me draw a different color here. You have a breakout area right here, and I would say the low of that candle, plus you have this moving average is the 50 period moving average kind of curling up underneath price. So what I would look for now is I would look for, by the way, you also have consolidation in here. So I'm not saying it will stop right there if it's headed down. I'm just saying that buyers will most likely show up there at least during the day. Some buyers are going to start showing up here in theory. It doesn't mean they're going to. It's not 100% of the time. So just keep note of that, where your price levels are. You could easily go long in this area with the stop loss just below this last pivot around 16.0. Let's say 16.14 was the price. So let's say 16.05. If you want to give a little bit of room, say 15.94 stop loss. And of course that's relative, depending on if you have options or if you're going with the shares. I don't even know if you can trade options on this one, but anyway, so that's VALE. Well done on that one. I would just, it might need a little bit more time. That is a pretty hefty move in here. So maybe it needs a little bit more time to the going across the screen horizontally before it can break out vertically again. So keep that on the docket. Last one, SPPI. So SPPI, I personally do like this curling kind of price action. For those of you who know how, you've been following me for a while, you know how I like to trade. I do like these basing patterns. I'm not saying necessarily this is a basing pattern. One way to look at this is that they are they are lower highs. And you do have higher lows in here. So it's almost creating a consolidation pattern to the, if I did this, I drew, let's say this. If it consolidates like this, the cool thing about these patterns is you don't always have to make a move yet. You can wait for price to break out, or you can make for price to break down before you go short. And I would take either trade. This isn't a perfect setup to where you could go long. You could go long on a breakout. If you can get through this resistance, these moving averages. One more thing about the moving averages. when price does this and you see price shooting through the moving averages over and over like this, I wouldn't put as much weight into the moving averages. I know we're below all three of them, or we're sitting on the 200 period moving average. Or I'm sorry, that's not the 200. The 200 is up here. We're sitting on the 20 period moving average. I would not put a lot of weight. Now there is definitely resistance in here, but I wouldn't put a lot of emphasis in these moving averages because price is already chopping through them. So that's something to be mindful of. Let's look at the weekly time frame. Now the weekly time frame is a little bit different. It's something that's a little bit more evident to me, which I didn't see on the daily, but now we see it on the weekly, is we have these serious lower highs. And what the following thing that I kind of jumps out to me is this: you have a down move in here, and then you have a bearish consolidation, usually resulting in another move to the downside. I don't know if that's going to happen. It's possible. So on a chart like this, for the reasons I just mentioned, the bearish side of the chart, I would really want to see price over $5 before I got involved, only because of the weekly time frame. I do love the daily chart, but I am a swing trader, and so I'm definitely going to be mindful of the weekly chart. Okay, so let's go down to an hourly time frame. See if I can find something else on a lower time frame. So lower time frame, you kind of see this pattern in here that we're talking about. It's almost like a triangle pattern in here, and this is trader choice. Like a trader could look at this and say, you know what, this is a triangle pattern. It could break to the upside, it could break to the downside. But now that I go back to the hourly chart, to me, again, it does definitely look like a bearish consolidation before another move down. And if it was another move down, maybe we'd find support down here at one of these pivots, maybe around $3, you know, $2.50, $2.25, $3, somewhere in there. But I would want to see this over $5 because of the weekly time frame. I would definitely want to see this over $5. Okay, that wraps it up from me for these videos. Thank you guys. I hope this helps you this week going through these charts. If you'd like to see any other content, let me know. Post a comment underneath the video, and we will see you guys in the next video.